All right, welcome back to the channel. Today I'd like to talk about the asset returns quilt. I've been doing this for a couple of years now, and I'm going to be putting it on screen shortly. But basically, this is a collection of asset classes like total stock market, total bond market, gold, emerging markets, commodities, what have you, plus my own portfolio, which I'm calling Fuchs portfolio, and then the classic 60/40 portfolio. And what I've done is I just take the returns for each calendar year and have been adding to it since 2003. So it's now 22 years worth of returns. And then I also look at the 22-year compounded growth rate of these asset classes and portfolio, just so you can see how they've done. So let me put it on the screen and then we can take a look at it together, and then I'll give you some of my thoughts. So here it is on screen, and what you can see is that in 2024, the top five performing asset classes or portfolio are gold, large cap growth, total stock market, my allocation, Fuchs portfolio, and the classic 60/40 portfolio. And we can see that gold has returned the most of any asset classes this year, including large cap growth and the total stock market. It's 26.66%. The last time this happened was back in 2010, where it led, all the asset classes. But as you look through the last 22 years, it's pretty much been all over the place. So sometimes it's really high, sometimes it's quite low, and then other times it's somewhere in the middle. This is pretty much indicative of most of the asset classes that are shown on this return quilt. The other thing that I'll note is that for the last 4 years, long-term treasuries have come in dead last. And that's pretty unusual to have that happen among asset classes. So yeah, long-term treasury, it's taking a beating. Does this mean that it's about to turn around? I don't know, and I'm not going to be making that call. But when you look back in the past, almost quarter century, long-term treasuries have moved up and down the return quilts, except for the last 4 years. And you can see that it's getting killed. So we'll see what happens going forward, but that's highly unusual, and that's something that jumped out at me. Because typically you don't see things at the top of the return quilts for consecutive years. That's pretty rare. And at the by the same margin, you don't see asset classes at the bottom of the return quilts for multiple consecutive years. So that really jumped out at me. So we'll see what that means. Looking at the full 22-year compounded growth rate, though, the top five is not a big surprise to me. Large cap growth is the top over the last 22 years. My allocation is next, total stock market, small cap value, and then gold rounding that out. That's not a surprise. So I'm actually pretty encouraged that, over 22 years, if I had stuck with my allocation, I would have done quite well. And even in 2024, if I stuck with it, I would have gotten, some 15%. And I think at one point in the market in November, I got there with my $1 million portfolio, and then the last 6 to 8 weeks, long-term treasury just got killed. And it is what it is. So in any case, I'm sharing this return quotes. I do it every year. And my intention here is that I do want to draw your attention to this, because the point of this is that a portfolio is built up of asset classes. At least that's my philosophy. Some people do it with stock picking and what have you, but that's not what I do. A portfolio is built up of asset classes, and the way you should look at it is not in isolation based on each asset classes, because they tend to move all over the board here, as you can see, except for that note that I made about long-term treasuries over the last 4 years. But they do tend to move all over. Sometimes they're up, sometimes they're down. And you hold them because you're hoping that when you have assets that are up, you can sell some of those and then buy the ones that are down at a discount when you rebalance. That's the whole philosophy. And that's why I kind of share this asset returns quilt just so you can take a look at it and say, okay, I see what's going on here. Because as you go back through time, you see that it varies. You know, the winners are not going to be winners forever, and the losers won't be losers forever either. And that's why you rebalance with a diversified portfolio. So I could have used historical data and gone back even further than 2003. And just for the sake of, like, you know, nice round numbers, I may take this back to 2000. But my intention is just to keep on building this going forward and seeing how it looks over the long term, and we'll kind of take it from there. Anyways, that's all for this video. Thanks for watching, and I will see you on the next one. See you later.